In this video, we're going to talk about how to form a bias in the market, and we're going to be using basic market structure. So it's a bit more advanced than the first video we did where we were using moving averages to dictate a bias. In this, we're going to be using market structure. And really, when it comes to market structure, there's three main sort of phases the market can go through, and that's like a bullish phase, a consolidation, or bearish. So we're either going to be moving up, sideways, or downwards. And if you're range bound, I would consider that in this central in consolidation as well. So price is just consolidating, but it's consolidating within a range. Now, to just frame this, what we want to know is that when we have a bullish trend, and these red lines represent price action, we need to have an initial high, we need to have a pullback, and then we have to have a new structure high that's broken and closed above the initial high. When we have a bearish trend, we need to have that initial move down. So we have our initial low, we have that pullback, and then we have that break of the initial low and close below it to form that new structure low. And that's how we confirm a bearish trend. And then a consolidation is, which I'll go over in a minute in a bit more detail, is where we don't get that at all. So we get this initial high, but then we break below the starting point here, we get an initial low, and then we get this pullback, but it breaks above this initial high. So now we get another initial high, we get the pullback, and so on and so on. So I'll leave the consolidation to the end because I'm going to explain the rules for the bullish and bearish trend first. And then it will make the consolidation a lot more clearer. So if we were continuing this trend, what we want to see is, if we wanted to see a continuation of here, we'd want to see price pull back, and this pullback can go anywhere down to the previous pullback. So we don't know how deep this pullback can be, but if it closes below this previous pullback here, then we're no longer in a bullish trend. And what you'll tend to find is the shallower the pullback, the stronger the trends. You tend to find shallower pullbacks on stronger trends. So, but let's just say we come down, we pull back to here, and then we push up. That we then next want to see price take out this new structure high, close above it, and this will be a continuation of the bullish trend. So the same for the bearish trend. So we've put this new structure low in. I mean, this move confirms the bearish trend, but for a continuation on, we want to see price pull back, and it can pull back anywhere, but it can't violate the high of this pullback. It can wick above it, but it can't close above it. So it can pull back all the way to here, and then we want to see price come down and close below this new structure low here to confirm the bearish trend. Now, if I just delete off these, now if we come back to this initial bullish trend, if this pullback does break and close below this previous pullback, the trend's invalidated and we're back into consolidation. And the same goes for the bearish trend. If this next pullback closes above the previous pullback here, then the trend's invalidated and we're back to consolidation. Now, the other really important thing just to mention on this is we don't know how deep our retracement, our pullback, outside return, I'm going to use these words interchangeably, we don't know how deep that's going to be until we've put in that new structure high. So the moment that we've put in that new structure high, then we know the low of our pullback, and that's for a bullish trend. And the same with the bearish trend. We could come down and price could do something like this, and then push down, and then we would know that our pullback, the high of our pullback is up here. It's not down here, because we can measure this as soon as we've broken and closed below this initial low. Right, next we're going to jump onto the charts, and I'm going to give you an example of how this looks on the charts. The thing I want you to do is, if you're new to this, is get your drawing tool out on TradingView and just draw these on, because it's a lot simpler when you can draw this on just until your eye sort of recognize it and picks it up. So the first thing we're going to look at is we have this initial move down, and you can see the price moves down and it puts this initial low in. We then start to get a pullback here, and we don't know how deep this pullback is going to go until price has closed below this low, below this initial low. So we don't know how deep, we don't know how deep this pullback is until price is closed below this low. Now on this candle here, we actually close below it, and then what we do is we come down and we put a new structure low in. So from this candle onwards, price has put in a new structure low. So we're in a confirmed bearish trend. So if we were using this for our bias, then we'd only be looking for strategies that meet, are short, or going short on the market effectively. Now what we get from here is we get a pullback, and again, we don't know how deep that pullback is going to be until price has closed below the low of this new structure low. And then we can see on this candle here that we get it. So we're still in that bearish trend, and we put in a new structure low. Now what happens next is, as price starts to pull back, what we actually do is we actually violate the close, break and close above the previous pullback. So you can see here that as we've come down for this move, this pullback hasn't broken above here. Then we've pushed down, we've pushed up again, and as we've broken down, but on this pullback here, we break up above the high of the pullback here. Now, as soon as price breaks above that pullback, breaks and closes above it, we're no longer looking for taking shorts in the market. We're no longer bearish, because the structure shifted. Okay, market structure shifted. So next, you can see the price pushes up, and we put this initial high in, and then we get this pullback here. Now at the moment we're still not bullish, because we've got to wait for that 3-point move. But as soon as price, or if price breaks and closes above this initial high, then we are bullish. So what we see here is we get this initial high, we get this pullback. We don't know how deep this pullback is going to be until price has broken and closed above this initial high. Now what we actually get here is that price comes up and tests that initial high. 1, 2, 3 tests, but it doesn't close above it, which is absolutely fine, because we're not in a bullish or bearish trend. We're just taking strategies that are around consolidation, or we look at our playbook and see if there's any strategies that we have that deal with consolidation, and then we can trade those within this market. But as soon as we break and close above this initial high, then we are in a confirmed bullish trend, and we can see that the market pushes up and puts in this new structure high up here. So now we're bullish. Okay, now we're bullish on the market. So the next thing that happens is we get a pullback, and again, we don't know how deep this pullback is going to be until we break and close above this new structure high up here. So if we pull the charts along, you can see that we get a break and close here. So now we've got this new structure high up here, and this just continues on and continues on. So we get this new structure high, we get this pullback, pullbacks there, then we get this new structure high, pullback, new structure high, pullback, and so on. So we've confirmed that we've got this bullish bias in the market. Right, we're just going to jump into one last example, and I'm just going to give you one final other little tip. So I want you to imagine that we are in a bullish trend. We've had our initial high, we've had our pullback, and now we've put in this new structure high. So the trend is confirmed to be bullish. Okay, we start to get this pullback here. Now what I want you to do is I want you to mark on your charts with this cube, with this box rectangle tool, the highest close, the highest high of the new structure high. So we can see it's there, it's over 2 candles, that's our close, that's our high, that's the highest high, and that's our highest close of this new structure high. And we've marked a rectangle tool and we're just dragging it along. Now, if price pulls back into that zone, we're going to consider we're not going to consider taking any more long positions. We're going to consider that we've already exhausted our long opportunities, and we've tested the high already. Now, until we get a close above. So if we close above it here, then we're looking to take long positions again. So the way this works is, and then we put our new structure high in there. So the way this works is that you'd probably be doing this analysis on a higher time frame. So if you can imagine this was on the daily time frame, we put this new structure high in, we have this pullback, and then you're dropping back onto lower time frames to look to get long to continue this up. But if you're using your higher time frame, you can use this as a point to show that the trend is over until we break above it. And it's just like a little method that you can use. So we then have this second new structure high up here, and we get a pullback, and the pullback comes all the way down. Let me just mark this pullback on to our previous pullback. Now what you'll notice if I just mark this zone on as well from the previous pullback is that price comes down and tests this zone but doesn't close below it. You could say that it's come down, sweep the liquidity there, taken liquidity and moved up. But for this example, we're just going to say that it's come down, it's spiked below it, and it's closed above it. So we're still bullish. We still consider this to be a bullish trend. And we're looking to take longs. So again, we're going to mark out the highest close and the highest high of our new structure high. And we're looking to take longs. We're looking to take longs until we hit this zone here, and then we consider the trend's over until we close above it. Now we don't actually close above it here, and we start to retrace back. Now at this point here, the market is no longer in a trend. We're not in a bullish trend. We've come into that zone, so we are consolidating. And then what you'll notice here is that price then sort of pulls back. We then put this new low in. So we've broken below our previous pullback here. So let's pull this across. So you can see that we've had this new structure high. We had our pullback. We've come back. We tested this new structure high. But it's not till this candle here that we broke below this previous pullback. So this would be our initial low. Okay. But then what happens is price rallies all the way up and puts in this close above here, okay, above this high here. You can see it closes above it, and this is what consolidation looks like, because we haven't got a defined trend. You know, we've put in this initial low, and now we're putting in this initial high here. And effectively what we're waiting for is either price to pull back and put in a new structure high to confirm a bullish trend, or if it was down here, in order to confirm a bearish trend, price would have had to pull back and then close below this initial low to cause to confirm a bearish trend. But what this video is just showing you is the reality of the market. It doesn't always trend. In fact, a lot of the Forex pairs are in consolidation a lot more than they're trending. But this will give you a good idea of what to look for in market structure. So I'm going to leave it there. I don't want to overcomplicate things. I hope you found this video useful. Please leave some comments if there's any questions you have about it. Please hit the like button. Please subscribe, and I'll be sure to put out some more content for you.